access all areas. What a week it's been so far. We've had some great seminars and some great speakers, and hopefully today's session will deliver exactly the same for you. Today, we're going to be analysing the conveyancing landscape, and specifically, we're going to be looking at data-led trends from the past 2 years, as well as exploring the future outlook for the market. Now, I'm joined on the panel today by two other industry experts. We have Richard Hinton and we have Rob Hailstone joining me today. So hi, guys. Now, before we start the session, I'm going to run through a little bit about our background, and then we'll hand over to Richard for our first session of the day. Myself, my name is Mike Connelly. I'm one of the founders from Legal Bricks. Legal Bricks are a specialist technology and product provider to the conveyancing sector and to the wider property market. Now, with over 20 years in property, believe it or not, I'm the baby of the bunch today, so we have a really strong panel for you. Legal Bricks were acquired by the Access Group around about 12 months ago now, and we form part of the quickly expanding legal division. I've personally been involved with technology for over 15 years and have project managed no fewer than 10 full system builds. I've worked in several aspects of the property sector, including mortgages, estate agency, HIPs, conveyancing searches, and anti-money laundering. I'm now going to tell you a bit about Richard. Richard has over 30 years in conveyancing. Richard's worked in senior strategic and business development roles, and in 2013, Richard created Pitsford Consulting, a data-driven consultancy that analyses key information and stats relating to the property sector. Richard, it's great to have you with us today. Could you share a few words about yourself?
Yes, indeed. Thank you, Mike. And sorry not to be with you visually, but nonetheless, very delighted to have the opportunity to have a chat. So you mentioned 30 years. I'm the middle child of the three of us, aren't I? In terms of my experience. 12 of those were spent at Shoesmith Solicitors, where I had an enjoyable time as they're running their marketing function. And part of that journey involved setting up what was then called the Direct Conveyancing Association. Today's the Conveyancing Association. Then I had 6 years with LexisNexis Visual Files, looking after the residential property there at that side, and that coincided with the HIP extravaganza. And then another 6 years with Searchflow, who you'll know, obviously, where I looked after business strategy. And one of the things I did there was take from concept to launch the Decision First, which many of your listeners will be aware of. But as you say, in 2013, I formed Pitsford Consulting, and we're a data-driven consultancy using land registry data principally to help law firms. So what we do is we take the price paid data set from the land registry under license, and we append to it the name and the address of the conveyancer who lodged the AP1. So what that means is that we know which law firm bought which property in England and Wales going back to when we started in 2013. There's over 7.5 million records now in that data set. And we use that in firstly with the conveyancing map, which obviously you're familiar with as clients of mine, which provides business insight, and also with conveyancing alerts, where we alert law firms when former clients of theirs newly list their previous purchased properties for sale. So that essentially that's me, Mike. Do you want any more now, or shall I stop?
That's absolutely perfect, Richard. I mean, as you know, just to share with the people on the call, you can see you have a very colourful and varied background. The insights today are going to be really kind of helpful to people, I'm sure. So on to Rob. Rob obviously has over 50 years experience in the industry. So Rob comes in right at the top of our knowledge tree today, the granddaddy of the call, shall we say. This includes 30 years as a residential conveyancer and 12 years creating, building, and still to today operating the Bold Legal Group, or as some of your members may know it, Rob, the BLG. No relation to the BFG, I hope?
No, thank you, Mike. And thanks for pointing out that I'm the grandfather of the speakers today. I don't know about top of the tree, Mike. Most people would say I'm probably out of my tree. I started my career not over 50 years ago, not quite, thankfully, as an office boy in a law firm in the centre of Bristol in 1974. I now have nearly 50 years experience. 12 years ago, I realised that many law firms would need an extra pair of eyes and ears to make sure they were kept fully informed and up to date with challenges in the industry. With nearly 700 member firms and 5,000 individual conveyancers, the Bold Legal Group membership works together, sharing experiences, problems, solutions, and successes. In addition to the popular weekly BLG bulletins, there's now a very active 24/7 online forum where experienced practitioners and experts will answer questions from SDLT, compliance, land registry issues, to the everyday challenges that frontline conveyancers face. Next year, on the 21st of June, put it in your diaries, please, we'll see our second annual BLG Summer Conference and Evening Soiree. And I have finally, with David Opie of Today's Conveyancer, also launched National Conveyancing Week, which will take place in March next year.
Thank you, Rob. Also, thank you, Richard. As you'll see, we have a great panel today, 100 years collective experience between us. So we should be in for a really insightful hour. Without further ado, I will hand you over to Richard for the first part of today's session, where we'll be analysing a range of conveyancing data insights. Richard, over to you.
Thank you very much, Mike. And thank you for the introduction. So, what we, as clients of mine, you challenge me really to come back and have a look at the COVID years and try and understand just what the data is telling us about what actually went on in the conveyancing market whilst we were languishing in the world of COVID. So we've put together this report. I'm going to take you on really a whistle-stop tour. I've got 20 minutes to take you through a report that took a lot longer than that to put together. The good news is that Access Legal have produced a polished version of this embellished with lots of commentary by other experts as well, which I'm sure they will be making available to you as part of this this exercise. So the slides you're about to see and we're going to run through are all contained in that report. So there's no need to, as I sometimes do, find myself photographing my screen in front of me. All of this will be available to you to have a look through. But that said, so what we said we thought we'd try and do is to have a look and see what the impact of the COVID years were on the conveyancing market. So we swung our data spotlight or searchlight, if you like, onto that period, and I hope you find what we're going to talk through interesting. Needless to say, if you'd like to personalize this for yourselves with your own firm or your own geography, then we of course can accommodate that as well. But just to start then by looking at the macro position first, what you're seeing in front of you is a slide which I find interesting. It's telling you, the number of residential purchase cases in England and Wales going back to 2007. The 2008 figures remind me that when people tell me that mortgage rates are high at the moment, that my first mortgage was at 17%. There was a cliff edge that the industry fell off in 2007 very markedly, and many of us will remember those days. Then we had it was more of a measured recovery over the next 5 years until we reached a plateau in sort of the second half of the 2015 to 2020 point, which is remarkably balanced, actually. I think, for all the excited commentary we read, the market was relatively stable. That said, I think the statistics do hide a myriad of lies potentially, because 2020, if you looked at it on a half-yearly basis, would have been about dramatically lower than it is at that point there. But and then we finished the year in 2021 as with the market we've all lived through, broached the million transactions. Looking now then at the way that works for firms. Toby, if you could just flick on one. What we're looking at now is how the residential conveyancing market is segmented. So on the left-hand side, you're seeing the number of firms who do more than 1,000 purchase cases a year, and on the right-hand side, the number who do between 10 and 50. From that, you can see, and the general observation is that the number of large firms is growing, and the number of small firms is shrinking. And the rate of shrinkage of the smaller firms on the right-hand side is more pronounced. So it's fairly obvious to us that we're looking at a market that is polarizing. Although interestingly, if you look at the detail, you can see that amongst those firms doing between 100 and 500 cases a year in 2021, that final column on brown on the right-hand side increased. So there was an uptick, which we'll come to in a moment when we talk about COVID. The next slide looks at the number of firms in absolute terms, too, if you wouldn't mind. And here what we're saying, again, quite an interesting change in the dynamic of the market. We're seeing that since 2013, between 2013 and 2020, the number of firms doing more than 10 residential purchase transactions per annum dropped by almost a quarter, 23%. But what we do see in 2021 is an uptick for the first time. We can see that trend being reversed. And we can discuss why that might be, but very obviously it would be the suggestion that in the white-hot market of 2021, non-specialist conveyancing firms found themselves turning their hand to conveyancing because there was just such a demand in the market for that. Interestingly, also in terms of we're looking at how trends might have been impacted by COVID already, you can see again on the right-hand side that the market share of the top 100 residential conveyancers was on an inexorable march upwards up until 2019. But in the COVID years, 2020, 2021, it started to fall back a little, which again is interesting, and there's plenty to reflect on there. But it may be that the utilization rates of the very largest firms was high, and that they simply didn't have the capacity to take on the burgeoning requirements of the COVID years. If we look at the next slide, Toby, we're looking at the same data in different ways, but again, this is quite an interesting illustration just what a funny old industry the residential property one is. This is looking at the number of firms and their collective market share. So just to help you, what that's showing you is that the top 50 firms did 21% of all residential purchase conveyancing in 2021. The top 500 firms did almost 60%, 57.5%. And the smallest 60%, which is about 2,800 firms on the right-hand side of that graph, they accounted for just 10% of residential conveyancing. It's interesting that smallest 2,800 firms did pretty much the same volume of purchase conveyancing as did the top 10 firms. So when we talk about this conveyancing industry having a long tail, I think the truth is that it's pretty much it's nothing much more than a tail in what we see in front of us. The next slide, Toby, helps us understand what's happened to the runners and riders, the major players. This is an analysis of the largest conveyancing firms in England and Wales in 2020 at the bottom, and in 2021 above. Now the names haven't changed much. There have been there's some rationalisation. You can see the Taylor Rose MW merger popping through, but what you are seeing, and again it's consistent with the slides we've just been looking at, is that the market share of these largest firms just fell off, just got knocked back slightly in the course of the difference between 2020 and 2021. So just to finish then quickly, and I'm sorry, I did make the point that this is a whistle-stop tour, but the next slide, Toby, just summarises for you really what the macro position looks like. Certainly, I think we understand that the market is polarised, and that it's highly fragmented, and that's an ongoing, I think it's a long-term trend. But I think what's interesting, that what the data is showing us here, is that there's a bump in the road with COVID. It remains to be seen if that proves to be temporary or not, but certainly the longer term trends have been arrested in some of the structural positions in the conveyancing space, or certainly due to the fact of COVID. So I've mentioned COVID a lot, so let me turn now to look at COVID here for you. So this chart is the red line is the number of residential purchase transactions. And across the top of that, you're looking at the national lockdowns that we had in 2020 and 2021, and in the bottom you can see the dates for the stamp duty concessions that the government introduced. This is an interest. I probably ought to get out a bit more, but I find this a fascinating slide. What it's showing you is that it was the first national lockdown which had an impact on the property market, and we all understand that because the market closed, so people stopped transacting. So you can see how the number of completions fell away dramatically in April and May in 2020, But then they had already started to recover by June, when we had the introduction of the stamp duty concessions. And you can see the initial deadline of March, 31st of March 2021, had a very positive impact, albeit relatively gentle in terms of transaction volumes. The market opened again, and there was pent-up demand, and the market grew very strongly. The two national lockdowns, 2 and 3, you can see had little or no impact at all, and again, understandably, because the market stayed open. You can then see how the movement in the stamp duty land tax deadlines, the movement of those had a very pronounced effect. The shorter the holiday, the sharper the increase in transactions, culminating in the figures for June 2021, which again, most people will bear the scars of that period. But we can see how the market leapt ahead in that time. A question for people, but for my money, I see that as very much oil being poured on a handsome blaze. I don't personally believe that the stamp duty land tax concessions were necessary for the recovery of the market, but it had some positives. As the next slide will show us, Toby. And you can see exactly this is a government data on government receipts from stamp duty. So again, you can see the dip to the first lockdown in Q2 of 2020, and you can see the speed and acceleration. So notwithstanding the concessions that were introduced by the on stamp duty, you can see that the government receipts soared during that period. So it wasn't all bad news. So to pull that all together, just to summarise that, it was only the first lockdown that had a negative impact on the market. You can take a view on as to whether or not they were necessary, the stamp duty land tax concessions. I personally don't believe they were. But as you can see how that pulls through, that the market just catapulted itself forward as a result in activity levels. So let me turn and look at a little bit more about the breakdown that impact. So was there a regional variation? And here this graph is looking at transaction levels 2020 versus 2021 by region. And the answer is probably not. I mean, COVID didn't shake the traditional regional model of conveyancing in this country. All regions experienced an increase. The largest increase was in Greater London and the South East. The lowest was in the North East, which again, I think we believe would be consistent with the general market. So I don't believe that the COVID had an impact disproportionately across the regions. The next slide looks at a national level at how the year-on-year position moved. I'm sorry, these aren't titled, but what this is showing you is the number of residential purchase volumes in England and Wales by calendar month. And then on the right-hand side, that's showing you the year-on-year difference. You can see that in 2021, the first half of 2021 was dramatically higher in percentage terms than 2020. Two reasons for that. The first is that obviously the first half of 2020 was depressed because that's when the market was closed and numbers collapsed. And the second reason is that the first half of 2021 was turbocharged by the stamp duty land tax. So it's on reflection, it's a very obvious analysis to be able to pull through, is that in 2021 the first half was much stronger than the previous year in 2020. So again, looking at the implications of that across the whole of for volumes, as I said a moment ago, there hasn't been much impact on the regional pattern for house buying. Everyone grew, the total number grew very extensively, and as I say, the regional picture was remarkably similar, and which suggests that the impact of COVID and COVID restrictions was felt broadly the same across the country. Let's look then at the impact on prices. Again, there isn't much that's exciting here. Prices all went up. I think perhaps the interesting thing is that the increase wasn't as pronounced as people commentary seems to suggest. Certainly year on year, the average price of properties bought in the regions increased, but not by outrageous amounts. The biggest percentage increase was in Wales. The biggest pound increase was in Greater London, which again I think is probably consistent. So I don't think there's a big story on house prices. The next slide again is it's a bit of a non-event really. One of the things we do with the conveyancing map is that we measure the post-completion performance of law firms. We know the date on which the transaction completed, and we know the date on which the land registry received the AP1, and that's the difference. That's the time interval we measure. What you can see here is that on average, it was taking about 21 days in 2020 for firms to submit the AP1. And then we're seeing again in 2021 that across the regions, that number went up by sort of 20%, say. And again, it's a classic sign of operational stress in the business, and it's one which some of our clients on the indemnity insurance side and the lending side tend to track quite closely, because to them it's a flag. But here I think that the message is that yes, of course, it took longer for people to register transactions in 2021 because of the operational stress that everyone was under at that stage. But again, the message is that it was fairly uniform as to how that went across the regions. This, however, is my favourite slide, because this is looking at the number of conveyancing firms who were buying properties in each of the regions shown here year on year. What that's showing you, and I'm fascinated to think how this pulls through, what it's showing you is that the regions which had the lowest number of additional firms working in conveyancing, because that's Greater London and the South East, were, if you remember the earlier slide, were the two regions where there was the greatest increase in transaction volumes. So I'm really interested to think through what that actually means and has actually been happening on the ground. I mean, one of the options might be that law firms in Greater London and the South East were working with lower utilisation rates, so they had more capacity within their organisation to take on that extra work, and that could be a factor associated with the profitability of conveyancing in those regions. It could be that firms in the London and the South East are more agile and were able to more quickly assimilate capacity into their own organisations in order to deal with the uplift in cases. Or it might be that those firms are more tenacious. The levels of stress that they were prepared to tolerate or introduce into their businesses was much higher than in other regions. I don't think there's a definitive answer, but I think understanding that would be very interesting indeed. And it's one of the key points that's emerged for me from all of this. Thank you, Toby. So the next slide then tries to pull some of this all together. And really this echoes some of the macro slides we looked at right at the start. But what it's trying to show here is what the changes have been between 2020 and 2021 in terms of the number of firms in different size groups and their market share. So just to help you, the orange line is the market share of the number of firms. So on the left-hand side, we're looking at the firms that were doing less than 10 cases a year make up 75% of all firms. And that 75% of firms doing less than 10 cases only managed to do 7.4% of residential conveyancing. So again, echoing the macro numbers we were looking at right at the start. And conversely, the number of firms doing more than 200 purchase cases a year is only 3.3% in 2020, and yet they were responsible for over half, 50.6% of all residential conveyancing. So the interesting story here in the comparison between the 2 years is not the two extremes, the very small firms or the very large firms, I'd suggest. it's looking in the middle there at the firms doing between 51 and 100 cases. So between the 2 years, it's a consistent proportion of firms, about 4.5% of firms are in that bracket. But these are the ones that seem to have taken up the slack or taken up the challenge of dealing with the volumes. So instead of in 2020, when they dealt with 11% of conveyancing, in 2021 they almost double that, 18.5%. So I think that's a very interesting point to reflect on, is how the mid-sized firms seem to have picked up the baton in order to deliver the conveyancing that the market needed to do. The report, incidentally, that Access Legal have available to you takes this analysis further and drops it all down to a regional basis. So you can look at, whilst this is across all regions, it looks at it in individual regions as well. So you can see what's what locally to you. So thank you, Toby. I think so this then helps me pull this all together for you. I'm conscious my 20 minutes are up. We're seeing, as I said to you, that it's a highly polarized market, conveyancing. I think we all knew that. There have been some changes that have pulled through as a result of the COVID crisis. We have to wait and see if that's temporary or not, but we've seen that the number of firms in doing conveyancing has ticked up for the first time in ages, and we've seen that the market share of the largest firms has ticked down again for the first time in a long time. I think in terms of how COVID's behaved, we've seen that the industry's had a good pandemic. You know, the number of the transaction volumes have jumped very significantly. I think the stamp duty, land tax, holidays have accelerated that, turbocharged it in a way that might perhaps be viewed as unnecessary. Regionally, however, I don't think that COVID has much of an impact. It had an equal impact, I think, across the regions. But I think I come back to my interesting point about how the firms in London and the southeast seem to have coped better with fewer resources than their colleagues around the rest of the country. But we're left to debate what might have caused that. But anyway, I'm going to stop there because I have been talking for 21 minutes. But it was a very interesting exercise putting this all together, and I think it as ever, data has a role in illuminating so much that we could and should understand better. Thanks, Mike.
Thank you, Richard. Well, I have to say some awesome information there. The granularity with which you've encapsulated the data is particularly impressive. I guess for me, I was fascinated by the SDLT holidays, the impact, I guess the magnitude of the impact that the various holidays had on the market. And this is something I'd like to circle back to in our Q&A at the end of the session. The macro market also interested me, analysing the data on the top 500 law firms, understanding the huge market share they have. And if I can just put you on the spot a little bit, Richard, in terms of that polarisation of the market, do you see this trend continuing? And if it does, what does it mean for the smallest firms? Because I know you mentioned also that there are a larger number of firms starting to do conveyancing. So where do you see the market going in terms of that diversification and the polarisation with the market share?
Well, I think, Mike, actually, I think that the forces which have driven that polarisation over the last 7 or 8 years are very strong. And consequently, I think the reactions of the last couple of years are extraordinary. And I think my personal view is that they'll prove to be temporary. I think the number of firms, PI firms and so on, who came in and did conveyancing, I think they will. They may not relish staying in the market. I suspect they'll find that's something they can step back from. Again, another interesting question because pricing of conveyancing has gone up, definitely. So has it become more profitable? Does that make it more attractive to firms? Again, yes, must be the answer to that. So I'll be fascinated to see how it goes. But my gut feel is that this will be a bump in the road and we'll return to a long-term trend.
Yeah. I mean, let's hope, as you say, that I know it's one of the things on Rob's discussion today in terms of conveyancing fees. And let's hope that that does make the market more lucrative. I guess an area where law firms want to explore more. I know there's potentially been an issue with recruitment over the past several years, with new blood coming into the industry. But hopefully we can get back on track and do that. So again, Richard, that was an absolutely superb talk. Thank you for the data. You can see a lot of effort's gone into it. For anyone who does want to look at that information in more granularity, we will be sharing the data set, the full report with you. It's a really interesting report, so that will be shared with anyone who's on the session today. Moving forward, Mr. Hailstone, how are you? Are you with us? I know we've had a few technical issues today, so just first and foremost, a quick sound check.
Yeah, hopefully you can hear me if you can no longer see me.
We can indeed. Super. Okay, well,
Well,
without further ado,
that's a bonus for everyone there.
there you go. We still see your image on screen. If you could remove that, that would be more even better. No, only joking. I will leave you to do your talk, and I'll hand over to you.
Okay, thanks, Mike. And yeah, some very interesting stats and information there, Richard. Thanks. So as we all know, we've recently experienced the longest, busiest property market that I can recall. Conveyancers and others have been pushed to the brink and beyond, and not all have survived. Many have left the profession for one reason or another, and I now think we're entering a phase where the Darwinian theory of survival of the fittest shall come into play, or, as Bob Marley put it, the fittest of the fittest shall survive. Now, I'm the last person to talk the market down, as there are enough doom and gloom merchants out there for me not to have to do that. But within the last few weeks, a few of my members have been reporting a drop in new transaction numbers. With Christmas just under 6 weeks away, that could be partly down to seasonal trends, of course. However, with the economy as it is, it would make sense to prepare for a period where new work is not as plentiful as it has been. There is no doubt that conveyancing is not what it was, and I think it's far more stressful and challenging than it has ever been, and the past 2 years have probably proved that. Excuse me. Last week, I attended the Society of Licensed Conveyancers conference in Derby, and I asked the delegates, over 200 of them, 6 questions and asked them to vote on them. The 6 questions were: have you increased your fees over the last few years to an acceptable level? Will you reduce your fees if transaction levels drop? Do we need more people training to become conveyancers? Do you enjoy being a conveyancer as much as you did in the past? And do you feel your role is understood by clients and other property professionals? And then finally, do you think holding a national conveyancing week is a good idea? So now turning to those questions individually, number one, have your fees increased over the last few years to an acceptable level? Yes, 62%, no, 38%, which is high, but not as high as I would have hoped. And it seems a pity that the 38% did not increase their fees when they had the chance, because as we all know, the opportunity to do that comes around very rarely. We don't have COVID, thankfully, very rarely, and SDLT changes are hopefully going to become more rare. 2, will you reduce your fees if transaction levels drop? No was 79%, and yes, 21%. That's a reasonably encouraging percentage, but it remains to be seen if the 79% stick to their guns, of course. And I wonder if the 21% who say they will reduce were part of the 38% who didn't increase their fees in the first place. And maybe that's a mindset, maybe it's a more negative mindset that those conveyancers have, and a lack of belief in what they do and the level of service they offer. Question 3, do we need more people training to become conveyancers? Yes, 97%. I'll let you do the math on the nose. Now, that's a shockingly high percentage, and the situation certainly needs addressing. But maybe it's a case at the moment of be careful what you wish for. The problem soon might be not a lack of conveyancers for the volume of work, but a lack of work for the volume of conveyancers. Number 4, do you enjoy being a conveyancer as much as you did in the past? The no's a massive 86%. Yes is obviously 14%. In view of the results of the higher fees question before, it's very disappointing to note that 86% of voters do not enjoy being a conveyancer as much as they did in the past, even though most of them now presumably feel their fees are an acceptable level. This indicates to me that a pleasant working environment and some understanding and empathy is, if not more important, as important as being fairly rewarded financially. Question 5, do you feel your role is understood by clients and other property professionals? The no's, 97%. Again, extremely high, and exactly the same percentage result as question 3, do we need more people training to become conveyancers? Unfortunately, not a surprising result. For as long as I can remember, clients and others have not understood what we do, why we do it, or even have a basic understanding of the process. With the process more complicated than ever before, that confusion will only get worse. Certainly, estate agents should receive some basic training on how conveyancing works. Otherwise, they just end up being like a car salesman has never driven a car or even has a basic understanding of how a car works. As far as clients are concerned, and with them moving less and less frequently, we appear to be fighting a losing battle. However, I have put together a short 90-second animation video that depicts the home buying process using the snakes and ladders games as a way of explaining it. If anyone would like to see it or even use it, please email me, rh@boldgroup.co.uk. It's free to use, and you don't even have to be a BLG member for me to send you the link to use it. The final question, 6, do you think holding a National Conveyancing Week is a good idea? Thankfully, yes, 94%. So we will be doing that next year. One thing is certain, we need to improve the image and profile of conveyancers and conveyancing, and that is something that will be addressed in National Conveyancing Week next March, but more on that shortly. As I've already said, I believe that conveyancing has changed dramatically since the turn of the 21st century, and I recently carried out some research with the BLG membership and asked the following 2 questions. Firstly, what were the main conveyancing tasks that had to be dealt with pre-21st century? And what are the main conveyancing tasks that need to be dealt with now? I thought the list would have more than doubled in number, and putting the 2 side by side would be a real eye-opener. I won't go into the various steps involved in detail now, but the results indicated there were roughly 12 main steps around the turn of the century, and now there are about 30 main steps. So my hunch about doubling was wrong. They've nearly tripled. Secondly, I asked if you had a wish list of, say, 5 to 10 things that could or should be changed or made easier or removed altogether from the conveyancer's remit, what would they be? As I say, I asked for 5 or 10. I received over 20. And in no particular order, and without commenting on whether or not I agree with them all, I'll read out in brief what they were. Starting off with, stop the never-ending mission creep for conveyancers. We've gone from checking the legal title to ensuring our clients aren't peddling cocaine. We have to be expert gardeners in order to identify Japanese knotweed and know as much about climate change as Greta Thunberg. Improve proof of ownership and how ownership is recorded. One way would be for the land registry to simply record a unique piece of information about the owner, e.g. their passport number or their national insurance number. Make anti-money laundering checks more practical. How about a system that buyers have to go through before they make an offer to the estate agent, one that a conveyancer and others can rely on? Please clear the backlog of HMLR delays as soon as possible. More upfront information should be provided by sellers at the outset. Make owning a property logbook compulsory. No longer let caveat emptor be the principle that sellers have to adhere to. Insist that all contracts are in a standard form, no matter where they originate from, solicitor or licensed conveyancer. Clever additional conditions shouldn't be allowed unless appropriate for a particular transaction. All protocol forms should be in the Law Society form. No, in inverted commas, big firm alternatives that are hard to follow should be allowed. It just slows the process down. Conveyancers should be instructed earlier, i.e. before offer and acceptance has taken place, so they can hit the ground running when it does. Excuse me. There should be policing and enforcement of CQS, and licensed conveyancers should be allowed to become accredited. Let's have a reduction in fee competition and stop creating a race to the bottom. Let's all be more bullish, robust, and value ourselves more. If we know leasehold properties and new build properties take twice as long, then charge twice as much. Controversial one, the next one, there should be a complete ban on referral fees. ban testimonials on websites and the use of review sites and such entities as Trustpilot. Mortgage valuers and surveyors should not require conveyancers to advise on valuation issues. The lender's handbook needs to be revised to reflect the current methods of verifying identity and carrying out AML checks. And again, another please simplify SDLT. There should be a unification of instructions from all lenders, whether regulated by UK Mortgage Finance or the BSA. All lenders should agree to third-party verification of identity and funding. There should be comprehensive chain information should be provided by estate agents at the outset of the transaction. There should be universal use of electronic signatures for everything. Deeds of variation, as we all know, they're required more and more often now regarding Section 121. It's about time government legislated. Leasehold, managing agents, and LPE1s, and need I say more, expletive. And finally, climate change advice should not fall within our remit. All of the above is partly why I've suggested we hold a National Conveyancing Week. The purpose of National Conveyancing Week will be, amongst other things, to inform, educate, assist, motivate, reassure, help recruit new entrants, improve the profile of conveyancers and conveyancing, and ensure that fees can be set at and kept at an acceptable level. Now, I don't expect conveyancers to take part from 9 a.m. on the Monday morning until 5 p.m. on the Friday afternoon. They will be able to dip in and out of the various online events as and when they like. Some of the topics we'll be covering, this is not an exhaustive list at the moment, will be recruitment, fees, well-being, collaboration and understanding, lenders, technology, education, and the forthcoming material changes, which I think will result in conveyancers and estate agents working more closely together and hopefully more harmoniously. Some firms have even asked if they can have some promotional material for their offices in order to highlight the week and to celebrate in-house. Some firms will even be throwing open their offices on one of the mornings and inviting in agents, clients, and others for tea, biscuits, cake, and one said Prosecco. Now, it's a big task I've set myself and David, and I can't do it alone. I need all of you to help me to try and improve the profile of conveyancers and conveyancing. But having on the whole enjoyed most of my 30 years at the coalface, I want to try and help the conveyancers of today so they have a similarly pleasant experience as I did. Thank you. I can't hear you, Mike.
It does help if I'm off mute. My apologies. I was just saying thank you, Rob. Another great session. Some truly insightful data and thoughts there. So thank you again. Quick reflection from me on the information that you've just discussed there. So a couple of things. Firstly, slightly concerning that some of your members are already seeing a downturn in transactions. Hopefully this isn't a trend that continues, but I guess looking at the market, we probably need to see how we evolve and how things develop in early 2023 to see a true reflection of this. Some positive data there on law firms finally increasing their prices. You almost took the words out of my mouth when you talked about a race to the bottom. I've been in this industry for around about 15 years now, and you know it's very much been a commodity-driven product where people look at the cheapest and the most cheerful as being the best. But as we all know, you know, you can buy a car and you can buy a Rolls Royce or a Mini Metro. There's a huge disparity in what you get for what you pay. The transparency of upfront information is something that resonates with me. I know the Law Society are looking at a TA6 Part 1 at the moment. I do feel it will have a big impact on the industry. We know that, you know, kind of at the moment, transaction times are at an all-time high. And I do see this as maybe an area where we could maybe reduce transaction times, but also deliver less fall-throughs for law firms. And the other one that really resonated with me was a complete ban on referral fees. You're a brave man. Hopefully there's no estate agents on the call today. I'm not saying I disagree with you, but I think it's one of those taboo topics that maybe needs to be thought out and how it would work. Again, thank you, Rob. Thank you, Richard, to both of you for your insights, the time, the preparation that's gone in today. What we would like to do now is open the floor out to a Q&A session. Now, we do have some questions that we have preloaded, just so we have something that we can talk about with the speakers. But what would be really advantageous for us today is if you could put any questions, any burning thoughts, or anything that is causing you sleepless nights into the chat, anything you want a little bit more information on. We would love to speak about it and just to give you our thoughts on that. You can do that anonymously, so you don't have to put your name against it. But if you do want to put anything into the chat, then please do. Okay, without further ado, I will start with our first question. I'll open it out to both Richard and to Rob. Do you think the SDLT holidays were necessary during the pandemic? The good, the bad, the indifferent. Where do you think we needed it? Was it too protracted, or was it the right thing to do at the time?
Well, perhaps shall I start, Mike? I mean, I think I've sort of made my view clear already, really. But having said that, I would caveat it. I mean, we focus very much on the impact it has on us as a property industry, but I think we have to realise that the property industry is a bellwether indicator for the whole of the economy, and the benefit that of the stamp duty or the rise in transaction volumes it resonates across the whole of the economy. So I think we shouldn't ignore that, and we should recognise that at a time of what was certainly a national crisis, I think a number of measures were taken which people might, with hindsight, think were not proportionate. But at the time, so I think it probably was the right. So perversely, I think it was the right thing to do. But I think with hindsight, it looked at just as purely as the property market. It caused a lot of grief for practitioners, which was perhaps unnecessary.
Yeah, I tend to agree with you, Richard. I think, with COVID, we entered uncharted waters. I think the majority of us thought that the property market was going to crash and that nobody would be moving. It turned out the exact opposite, obviously, because people wanted to move away from the cities to the countryside and the seaside, etc. So I think what the government did was that right at the time, but with hindsight, they probably didn't need to do it, unfortunately, and it did, escalate the market to a ridiculous level. And I think we've had a very busy 2-year period. We could now be entering quite a quiet 2-year period. So it's gone from one extreme to the other. Maybe we needed the SDLT changes now.
Yeah, good point. I guess it's that saying, whatever goes up must come down. And inevitably, we've seen a very protracted period of huge growth in the market. At some point, that has to slow down. And I guess maybe we're coming into that period now through a multitude of other sins, which brings me on to my second question. With the impending recession, the current cost of living crisis, and accompanied with the rising interest rates that we're now seeing, what impact do you both feel that this will have on the economy and the sector as a whole?
Well, again, from my point of view, Mike, I mean, I've been scratching my head as to why the market has stayed as high as it has for the last 6 to 9 months. Really, I mean, I think back when I was at Shoesmiths, any single indicator in the market that was flashing red used to stop the market, and I think we've got a whole bank of them flashing red, and have been for a long time. In terms, we've got a war in Europe, we've got the economic problems that you've alluded to, and all manner of different alarms that would normally signal the market shutting down, and it hasn't, and I think that's testament to the impact that COVID has had on the market. But now I can't believe that it isn't not now going to happen, if you see what I mean. Sorry, that's protracted. So I do feel that we are in for a period of a retrenchment in activity levels in the conveyancing market, residential conveyancing market. I think we are on the brink of that adjustment, and the figures are suggesting that now, aren't they? In terms of completions and so on, we're seeing those numbers fall away, and we're seeing it. I mentioned we have our alerts product. We're seeing a lot of interest from firms who have hitherto been too busy to entertain the idea, and now looking at the sort of the cold wind of overcapacity blowing through their operations, and I think we're on a turning point.
Yeah, I think we probably are, unfortunately. We'll have to wait and see what the Chancellor says shortly, and how that affects things. We probably won't know the true effect until we come out of Christmas and enter maybe spring, because that's a seasonal trend, as we all know. But I think firms should start preparing for quieter periods. and talking to their work provider contacts more often than they have done in the past, getting ready for that downturn next year, unfortunately. When I say talking to them, I actually mean going out and seeing them as well, not just talking to them online and Zoom calls. Make those relationships even stronger and go and visit your contacts if you can.
Yeah, good points, guys. And I think, again, looking at the marketplace and analysing the data that's available, I think even the industry experts are unsure as to what the future looks like. We can see that, interest rates are going to play an impact on the market. We can see that the Ukraine war is having an impact. The cost of living is a huge burden for people to factor in at the moment. So I think there's going to be so many things that will change the face of the economy. I think it's just trying to understand it and see how we, as kind of people who are in the industry, can guide it, can assist it, and do what we can to have a positive impact for our clients. So something for law firms, estate agents, mortgage advisors to maybe work together and to factor in. Now, moving on, one of the things that we've had a question from one of the delegates today, and that is, do you think electronic compliance solutions, so AML or biometrics, should have a positive impact on a law firm's professional indemnity renewals? Now, I'll put this one firstly to Rob, because I know you were at a conference last week with myself, Rob, the SLC conference, and I know this was an area that was discussed. So do you have a view on this?
Yeah. Yes, I do. But we know what insurers and brokers are like. It's highly likely they will. There's plenty of things that we do now that should have an impact on PI, a positive impact. But for some reason, the brokers and the PI companies don't see it that way. We've just got to introduce those new measures and see if they, help and reduce claims, I guess.
Okay, yeah, good point. We've got another one from our, I won't ask you on that one, Richard. I'll come back to you on this one if I can. So another one from one of our delegates. So do you think the land registry would be better using resources to clear the 20-month backlog than carrying on with the land charges scheme, which seems to be going at a snail's pace for very little benefit?
Well, I sympathise with the sentiment. I think I do agree. However, I mean, of course, operationally, it isn't that simple to switch people out of that. It is a huge program they've got running with local land charges and put them onto the managing the backlog. But yes, I'm afraid I do agree with the question. I think there isn't much to be gained, I don't think, in the short term from the local land charge project, which I'm delighted to be proved wrong. But and the backlog at the land registry is it's an issue that it impacts on practitioners, obviously, but it filters through to myself with the data we use and so on. It has some big implications. The Office for National Statistics rely on that data. It's important in lots of different ways.
Good points. What I would raise in terms of maybe just counterbalancing that argument, one of the things that we do as a company are property searches, and we are seeing much slicker, much quicker turnaround times from the 50 land registries that are now utilising the land charges that are now utilising the land registry service. So sometimes I wonder if there's a little bit of short-term pain for long-term gain. I think one of the things you said there, Richard, is absolutely spot on. Again, I was at the SLC conference. Rob was there last week, and we had the chief exec from Land Registry doing one of the seminars. One of the things that was very clear to me was that they have had to staff up quite considerably over the past few years to manage the volume of transactions. They have a very clear roadmap over the next 2 years of where they're looking to reduce them in terms of the requisitions and how they're going to make things quicker in terms of the submissions. But again, it's a really good question and one that I guess will polarise the conversation depending on who you are and what experience you're having with Land Registry at the moment.
Mike, can I just quickly comment on that?
Of course you can.
I mean, I think the delays are getting more extreme, by the day. Some registrations now won't take place until the end of next year. I've even seen some predicted to complete in 2024. And I was just wondering whether Richard, who's very good at stats, land registry stats, could put some stats together on how quickly or how slowly the land registry were completing the applications?
No, I don't have any numbers for you, Rob. I just have anecdotally that it is a real problem. The data we take, we've reinforced the way in which we take it, so that we take a provisional quarter and then we refresh that 6 months later, because just to sweep up the transactions which we might otherwise have missed.
Just as an aside, Rob, I actually have an image of one of the slides from last week, which I will share with you. So it may be a nice one for you to be able to share with your members, but it talks about that specifically, the transaction times and broken down by category. So I'll share that with you. So it may be a nice one for your members.
Okay, thanks.
No problem. Okay, so moving on, we're looking at, I guess, conveyancing prices. Now, according to Property Solvers, conveyancers have increased their fees by just over 20% on average over the past 2 years. A couple of questions for you both. Firstly, was it long overdue? Is it a good thing that they've increased their fees for the market as a whole? And do we see it lasting?
I think it is a good thing. I think it is long overdue. I think my experience of conveyancers, if they'll forgive me, is that they tend to be sort of paranoid intellectuals, for whom pricing is something that they react to in a negative way in a competitive environment, and don't hold the line, as it were. So I think it's long overdue. That the value of what conveyancers do is not well understood, as Rob's mentioned, and I wish and I hope that it's sustained going forwards.
Super. I won't ask you on that one, Rob. I'll come to you on this one if I can. So in terms of technology, a really important one that's kind of gone from 0 to 100 over the past 2 years. What role could and does technology play in supporting conveyancers moving forward? I'm looking around, kind of increased efficiencies, streamlining services, and how that integration of technology is going to assist law firms.
Well, I gave up conveyancing in 2005, and I'm not really techie myself, but I think going forward, if we're going to be able to cope with the 30 or more steps that we've got, and those aren't reduced, transaction fees have got to go up massively and volumes down, or we need much greater use of technology to help deal with those 30 steps. Otherwise, it's just not sustainable.
I agree. I think you're absolutely right. I think technology needs to be embraced. I think I saw some information recently around the use of technology in larger firms, and it's one of the presentation I'm doing. The adoption seems to be more widely approached for larger firms as opposed to smaller firms. So maybe that's something that again can be analysed within the market. Richard, do you have any thoughts on it before we wrap up?
Yeah, well, I think you're right. And it sits behind this polarization in the marketplace generally, I think. Firms that embrace technology mean they harness internally the efficiencies that it delivers them. But the conveyancing process means that that only takes you so far, because you're dealing with chains and firms on the other side. And until and unless those firms embrace the same technology, the advantages are much reduced. So I think there comes a point where you have to talk about mandation in this, and pushing people in the right direction, in the way the lenders do, and the regulators increasingly do, because there's a collective action problem. You need the whole of the market to move.
There certainly is. It's such a fragmented marketplace, and when you look at the multitude of people, of organisations who are involved with each transaction, from solicitors to maybe IFAs to mortgage advisors to estate agents, we then have all the logistics that sit behind it in terms of home movers and transition of gas and electricity bills. There's a whole wealth of information that goes into everyone's home move, which is why probably most people say that it's one of the most stressful times in their life. But I think even if we can take a small amount of that and make it a little bit easier for people, for conveyancers, for the industry as a whole, then it can only be a positive thing, would be my view. Rob, Richard, I'd just like to thank you both for your time today. The information that you both provided, the information that you've put into the slides, has been absolutely superb. Thank you to everyone who's jumped on the call today. We have so many sessions going on that are continuing into next week for Access All Areas. So if you do want to look at any of the other sessions, just log on to our website. You'll see from there you can book in, and hopefully you'll get some real value out of this. If there is anything that you would like to ask to myself, to Rob, or to Richard individually or independently, then please feel free to reach out and we will be happy to answer your questions or queries. If not, again, guys, thank you for your time today, and thank you to everyone for joining us.
Thank you. Goodbye.
Great.